Welcome to the Small Business Tax Savings Podcast, powered by Jetro. Each week, we bring extremely valuable accounting and tax tips specific to small business owners. You will be on your way to growing your business and putting more money in your pockets. Here's your host.
Hello and welcome back to another episode. Today's topic is Introduction to Retirement Options for Business Owners, and we have a special guest on today. Now, before we get into that, this episode is brought to you by Jetro, a digital accounting firm servicing business owners across the country, helping them relieve stress around financials and save thousands in taxes. I am your host and founder of Jetro, Mike Jesowshek. And again, today's topic is Introduction to Retirement Options for Business Owners. And we have a special guest. We have Matt Ruttenberg from Life Inc. Retirement Services on today. Matt, welcome to the show.
Thank you, Mike. Appreciate it.
Yeah, so this is one topic that I think there's a lot of confusion on. There's a lot of different options and routes that business owners can take. So I'm really excited to dig into retirement options and the different options out there. And this is actually going to be a series that we're doing together. So we're starting out by doing an introduction, a high-level overview, and then we're going to drill into various options so that listeners, you guys can dig into the specific episodes that really kind of fit exactly what the information that you need. So, Matt, if you just want to get started, explain to us a little bit, where you come from, what you guys do there, what your kind of focus is for business owners.
Yeah, absolutely. So we're similar to Jetro, where we cover several states across the country. We do in-person and also digital 401k implementation. We are exclusively retirement plans for businesses. So anything for a business owner, we will start a retirement plan. So it could be SEP IRAs, simple IRAs, 401ks. We don't do the individual planning. It's purely experts in the retirement plan space.
Awesome. And, I think that's one key thing to note. And, when we bring people on our episodes, we've had someone on that talks about sales tax. And I really enjoy partnering with people that are so specialized because I know that they're experts in that area, that they're going to be able to provide the best service in that specific area. And it's awesome to kind of have partnerships and be able to bring you guys on to these episodes. So, in this first episode, like I said, we're going to talk about a little bit of introduction, some of the options. And to do that, we just kind of want to run some scenarios to say, okay, based on this type of scenario, what is a retirement option that's available to you and what would make sense? Again, this is meant to be a high-level introductory overview, and we're going to dig into these specifically in a series that we're doing. So, Matt, when we start off talking about retirement options available, I think we have to kind of pinpoint two different groups. You have a solopreneur, or someone with no employees, maybe just independent contractors, and then you have a small business that has employees. So to start that off, let's look at a small business with employees. You mentioned pre-recording that there was some things to consider with what your goals are as a small business owner if you have employees. So can you explain a little bit there, kind of what are the scenarios that you would see with a small business owner that has multiple employees, over and above just the owner?
Sure. Yeah. And every conversation that we have with folks or even they need to have with themselves is, what is the primary goal? What are you looking to accomplish? Why are you looking into a retirement plan? So, and it always comes down to two answers. One is the employer is looking for their own retirement savings or tax savings. And the second one is this is purely for employee benefits. They want to recruit high level or high quality employees and they want to retain them. It always comes down to one or the other. Sometimes it's both, and that's actually a good direction to go with too. So it's primarily one of those two.
Got it. So let's say you're small business owners with employees and you, of course, maybe want to save for retirement for yourself, but your main purpose of adding a retirement plan in your business is to help with recruiting and retaining those high talented employees. What type of options do they have when they're looking at retirement options within their business?
Sure. Yeah. So with the goal of recruiting high quality employees, sometimes the employer does want to save some towards retirement. And the goal here is to build and mold a plan the way you want to build it. And with the idea of having some sort of incentive for them to stay. This kind of breaks it down into two types of plans. One is the traditional 401k plan, and then the other one is actually considered a payroll deducted IRA. So let's go ahead and start with the traditional 401k. I like to explain this as simply as a cafeteria style 401k plan, meaning you can mold it any way you want in regards to how much you want to match and how long the vesting schedule is. Since the employer isn't really looking to save too much in this scenario, they can start low. I like to tell folks to start low, and then you can always increase your match. A good scenario with this would be maybe starting with 0.25% or a quarter, 25% of what they are participating in. So, for example, if the participant is putting in 5%, the company would match at 1.25%, and then you can increase from there. The caveat on the traditional 401k when you're molding this and creating this cafeteria style plan is there are limitations to what the employer can put in. And basically it's as simple as the employer can put in 2% over the average of all of the employees, whether they're participating or not. So even if there's a few employees that are putting in 0, that goes into that calculation. That is why the traditional 401k, although you can create and mold your own matching investing schedule, you can put some away.
Got it.
The second is the payroll deducted IRA. And I'm mentioning this second basically because I think this is a great placeholder for someone who is maybe inching into the retirement plan benefit space, because there's no rules to you having to put a match or even having a vesting schedule. This is simply a placeholder where maybe down the road you're going to introduce a more robust plan down the road. The employer does not have to put a match or a vesting schedule in place at all. They can contribute, but in essence, this is simply putting individual IRA accounts being funded through the payroll system. In our opinion, I think any company that has employees should be putting something like this into place, because there is a psychological barrier for people to actually save for retirement. If it comes out of their checking account, it feels like a bill. Instead of actually just repositioning their money from one account to the next. Having it coming out of your pay through your payroll, it makes it easy. It's turnkey option, and you're able to, let me rephrase that. You don't have to go out searching for a financial advisor. It's right here in front of you, and you're able to create this retirement, start planning for retirement without actually having to go out and put a lot of effort into it. So it's an easy placeholder, but it's also allowing the employees to save for retirement through payroll.
Got it. So with that payroll deducted IRA, is that essentially just an employee option? Does the employer do any kind of matches or contributions to that, or is that just employees?
Yeah, not at all. It's simply the employer has no liability in place on this either. Because the only thing they're actually doing is withholding the funds and sending it to the investment company. There is no match on here at all. In fact, you cannot put a match in place on this.
Makes sense. Yeah. And I like the idea of, when you're a small business owner, you don't know where your business is going to go, how fast you're going to grow, how many employees you're going to have, if you're even going to have employees.
Right.
But it's something that this is an awesome option to say, hey, we're just hiring our first employee. We want to have some option or some benefit there, some way to get a retirement deduction on their paycheck. But we know we're going to grow into something further, but we don't know what plan's right yet or what plan is right today. And so I like that being a placeholder, an option that you do have something there. So let's kind of take the switch. So we're talking about, you have employees, you're looking to recruit, retain high quality employees, traditional IRA, payroll deducted IRA are options available. Now, what if we turn the switch and say we're a small business owner with employees, but really the goal is the employer or as the owner of the company is to save on taxes and really save for their own retirement. Of course, with the added benefit of being able to provide a value to employees, but their main goal with the retirement plan is to save taxes and, increase their retirement benefit.
Sure. Yeah. And so with the goal of tax savings for the or their own retirement, and this is probably more often than not the primary goal. And we're most likely going to be looking at either a simple IRA or a safe harbor 401k for a small business with this primary goal. And for these two, the deciding factor is basically how much do you want to contribute as the employer. There's limitations on each, and that's when we dig into it a little bit further. I'm choosing these two because they have pre-approved IRS matching and vesting schedules. Meaning, if you choose one of these schedules, the employer can save as much as they want up to the maximum contribution rates. So the IRS is doing this and allowing this because they want to make sure the employees have the fair factor. The employees are given the same opportunities as the employer. So that's where those come into play. I could go further into this, but we'll keep it at a high level today. Let's start with the simple IRA. There's a few options inside the simple IRA. You can either choose to give 2% to everybody, whether they contribute themselves or not, to all the participants, or to all the employees, or you can actually give a 3% match to only those who participate. Those are the pre-approved matching schedules. The vesting in this is an immediate vest, and vesting basically means how long does the participant need to remain with the company in order to take those benefits with them if they were to leave the company and move on to another employer. The contribution limits for 2020 anyway are $13,500 if you're under 50 years old. If you're over 50, then you can do $16,500. So with those pre-approved schedules, you can go up to that amount regardless of what your employees are doing for the simple IRA.
Makes sense.
Moving into the safe harbor 401k. This is the most popular 401k for small businesses for the reason of the employer is allowed to max out their contributions. The difference on this one is you can contribute up to $19,500 maximum contributions in this one. And if you're over 50, you can do 27. There's actually a few more options with this that most people aren't aware of. There's actually two kinds of safe harbor 401ks. The most common, I call it the standard safe harbor, where it's an immediate vesting schedule where the employers, or excuse me, if the employees were to leave, they take the match with them. But there's one that's becoming more popular. It's called the QACA safe harbor. And QACA stands for Qualified Automatic Enrollment Arrangement. This allows you to not only maximize your own contributions, but it gives your employees a 2-year vesting schedule, which is extremely popular because it gives the incentive to the employees to stay. And also, not getting into too much of the tax benefits on there, but with the new Secure Act that was passed late last year in 2019, it gives the employee or the employer an additional $500 tax credit because of that QACA piece. If you're giving your employees a benefit where they need to opt out of the plan versus opt in, the IRS is giving the company an additional $500 tax credit for the first 3 years. So basically, your employees would have to opt out versus opt in, where every other plan that I mentioned today, they have to opt in. So this new Secure Act that was passed is allowing that. So all those allow the employer to maximize their contribution limits.
Awesome. So, if we're employees looking to retain and recruit high talented employees, we're looking at traditional 401k or a payroll directed IRA as options available.
Yep.
Though a small business owner that's looking to main purpose is to save on taxes and save for their own retirement, we're looking at possible options are safe harbor 401k and a simple IRA. And again, these are just kind of general guidelines or scenarios that we're going through. So that all makes sense and is good information. Now, what if we're a solopreneur? So we're someone that's just running our own business ourselves. We don't have any employees right now. We maybe have some contractors or something like that, but we don't have any physical employees. What would be an option for those business owners?
Yeah, and this is this is where you get really creative with these solopreneurs, as I like to call them. There's no full-time employees. Or maybe they hire primarily independent contractors. But again, this goes into how much do they want to contribute. And I'll start on the low end and work my way up. But sometimes it could be as simple as an IRA, just a traditional IRA. If they're going to contribute under $6,500, which is the maximum contribution for this year, keep it simple. Stay with the IRA. It's low cost and it's easy to get into. And the next step I would probably say is the SEP IRA. SEP stands for Simplified Employee Pension, although it's simply an IRA. It allows you to contribute up to 25% of qualifying income, which is basically for this year, you can contribute up to $57,000 into a SEP. And actually, technically, you can have employees under this type of plan. However, whatever you're going to give yourself, so for example, 25%, you also have to give your employees that same percentage. This is an employer contribution. They are not able to contribute their own money into this type of plan. So for that reason, we don't advise a SEP too often. If there are employees, there's other ways to get the job done, if you will. But we call that the next step up, is the SEP IRA for a solopreneur. The next level is where you get really creative. It's an individual 401k. Sometimes people call them solo 401ks. And first and foremost, you can include your spouse in this type of plan. So if it's a jointly owned company between a spouse, this counts. This works. But you can put up to $19,500, just like any other regular 401k, of your own contributions, 100% of your own contributions, up to $19,500. But on top of that, I like to explain this like an upside down tiered wedding cake, where the first level is the 401k, $19,500. The second level is a profit sharing plan that you add on top of the 401k. And that is calculated similar to the SEP IRA, where you can do the 25% in addition to that, also maxing out at the $57,500. So between the simple 401k and the SEP, often we move to the individual 401k, just the way the dollars work out. If you're paying yourself over $200,000 plus, the SEP would equal out to the same calculation as the individual 401k. But if it's less than that and you're paying yourself less, then it turns out the individual 401k, actually you can save more. And the third tier beyond that, actually, and this gets a little bit more complicated, is something called the cash balance plan on top of, so that would be the top larger tier on the cake. You can get into 6 digits of pre-tax savings into this. And that's something that we'll dig into a little bit further into another episode on that.
Awesome. So, one thing that I liked about when we're talking about a solopreneur or, no employees is a question you have to look at is really how much are you looking to put away? Because, one thing I thought was unique that you mentioned is if you looking to maybe save $6,000 or less, just use a traditional IRA. Don't overcomplicate things. And
that's right.
And we see that a lot in tax planning. I always start by, if you have no employees, how much money do you want to put away? we can create a SEP IRA. We can do an individual 401k. But if you're looking to put $5,000 away, why set up all that effort? Why have to, wrap it into your payroll if you're an S corporation and kind of deal with a lot of extra steps there. So I think that was really interesting. So just to kind of wrap up where we've been, kind of things we talked about. You're a small business with looking to recruit and retain high quality employees. What are the two plan options for them?
The traditional 401k, basically because you can mold and fit it to your budget, or the payroll deducted IRA if you don't quite have that budget yet. And honestly, the traditional 401k, you don't have to match either. Again, it just matters on how much you want to put aside for yourself.
Got it. And now let's kind of shift gears. You're a small business owner with employees, but your main kind of purpose or goal out of that retirement plan is for tax savings and to save you, the owner, on retirement. What are kind of the two top ones that we recommend for them?
Yeah. So the simple IRA is quite common. And then the safe harbor 401k, one of the options between all of those safe harbors.
Okay. And, finally, where we just kind of talked about solopreneurs, no employees, maybe just a husband and wife of the owner. What are kind of the couple options that we talk about there?
So the IRA, the SEP, and I'll put these in order. So it's the IRA, in relatively speaking, with the amount that you're putting in towards retirement. So it's the IRA, the SEP IRA, and then the individual 401k, where you can layer the profit sharing on top of that, and the cash balance plan on top of that.
Got it. And now, those are, various different options that we talked about in various scenarios when we think that they make the best fit. But as you kind of mentioned, there's the opportunities where it doesn't necessarily mean that because you're an employer looking to retain and recruit high quality employees, you're not forced into those two options. You're just basically saying those are typically the best routes
Correct.
For you. So as you mentioned, if you want to do a SEP IRA and do a 25% match on everybody, or not a match, a 25% contribution for everybody, or whatever that dollar amount it is, you have that option.
Absolutely.
That's something that's advised at that point. No, I think this was awesome. I think this gives us a really good idea of kind of different scenarios where you would land, kind of the options you have. After this, in future episodes, what we're going to do is we're going to dig into these plans a little bit deeper. Talk a little bit more about more specifics about them, maybe what the costs are, what limits are, what the matching and all that type of stuff looks like. So I'm really excited to kind of dig deeper into that. Matt, if you can just kind of end this by just giving us a little bit of information on where people can find you. I'm also going to put a link in the show notes with a link to your website that people can go there for more information, go through some analyzers. So just give some information on that.
Yeah, and I think the best way to find us, our website is Life Inc. RS. That's lifeinc.retirementservices.com. And in that link that Mike is going to be giving you, there are lots of tools. There's information and quick guides for every plan type that I mentioned. And there's also a tool embedded on that landing page where, and we call it the retirement plan evaluator. In essence, what it's doing, it's going to take you about 30 seconds to go through it. It's going to ask you a few questions, and it's going to point you in the direction of one or two of these plan types that I just mentioned. So that is going to give you a lot of information, including how much you can put aside in these plans. I think that's going to be the best bet.
Okay, awesome. Well, Matt, thank you for coming on to episode, and we look forward to digging into these strategies or retirement options a little bit further in future episodes.
Absolutely. Thanks, Mike. Appreciate it.
A couple last things before I go. One, don't forget to check out our Facebook group. Simply search in Facebook, Small Business Tax Secrets, and there's going to be a group there that you can join of small business owners just like you, collaborating, asking questions, and working together on this idea of bookkeeping and taxes. And second, I'm extremely excited that we're going to be launching 2 new programs. To get on our wait list and be an early adapter in this, go to www.jetrotax.com/launch. That's www.jetrotax.com/launch. On there, you're going to be able to join our wait list and be the first to know when we launch these 2 programs. There's two programs that we're launching. One is the tax minimization program and the stress-free bookkeeping training program. These programs are going to be game changers for small business owners, and I'm extremely excited to be able to launch them for you. In them, there's going to be a library of do-it-yourself bookkeeping videos and content. On the tax minimization program, we're going to have a library of tax strategies and implementation guides so you can implement and fully vet out and push out these tax strategies yourself. We're going to be doing training. We're going to be teaching you how to do this. They're going to have implementation guides. There's also going to be options to ask a pro, unlimited access to our team, a private Facebook group for members to collaborate together, monthly group training, discounted on services and partner services and things like that. So these programs, I'm extremely excited to roll out. I want you to be a part of it. And if you join our waitlist, you'll be the first one to know when we launch them. Again, it's www.jetrotax.com/launch. www.jetrotax.com/launch to join our waitlist to these new programs that we're going to be launching. Thanks again, and we'll talk soon.
This has been another episode of the Small Business Tax Savings Podcast from the team at Jetro. If you enjoy our weekly episodes, please leave a review on whatever platform you listen to us on and share with other business owners. If you have any questions or future topics you want to hear, email them to tax@jetrotax.com. Thanks for listening and have a great day.